morning. You're watching Business World Live. I'm Danie, Laurel.
And I'm Jess, Delos Santos. It's the start of a new trading day, but first, let's go straight to our top story. Inflation may have eased slightly last month, according to a poll by Business World. A poll of 13 analysts last week yielded a median estimate of 3.2%. It realized that the forecast would be slightly lower than the 21-month high of 3.3% logged in November last year. This would also be in the midpoint of the range of 2.9% to 3.7% given by the Bangko Sentral for December and within the 4% target for 2020. Analysts believe that the consumer price index slowed during the last month of 2020 compared with November, when food prices went up due to the damage to agriculture brought by a number of typhoons in Luzon. RCBC Chief Economist Mike Ricafort says higher prices in November already started to ease with some normalization of supply chains and logistics. However, he said this was offset by the latest damage due to Tropical Depression Vicky that flooded parts of Mindanao, Visayas, and northern Luzon. University of Asia and the Pacific economist Vic Abola said rice prices were stable to slightly down last month. Analysts noted that the increase in transport prices may be an upside risk to inflation. The Philippine Statistics Authority will release the December inflation data tomorrow, that's January 5th. All right, Dan, officially we're kicking off 2021 today, at least work-wise, and it's the first trading day of the new year. Our markets rejuvenated at the open.
I don't know, Jess, are you rejuvenated? But at least in terms of markets, if we do base it on, let's say, Australia, which was, let's say, the first one to reopen this morning, they were up. And also, if you take a look at the S&P 500 futures contracts, that follows what the positivity, at least we ended positively in terms of global stocks last year. You can see on my terminal here, especially the American stocks. So they were trading on Christmas Eve mismo. So Christmas, the day before Christmas, not Christmas Eve. But nevertheless, the rest of the markets, for us at least, were closed. And they had actually touched record highs on the last day of 2020. Another thing to be watching out for here, however, is Europe. You can see that nevertheless posted some losses on the last two trading days of 2020. Now, another one that we want to be watching out for is Asia Pacific and how that is opening following, of course, Australia. And you can see here how it's still a very mixed picture. So the Nikkei 225 is down by 1.1% over in Japan. Taiwan, however, is up by 0.4%. Korea's Kosdaq and Kospi are going in diverging ways here. You've got the Kospi up by 0.3% and the Kosdaq down by 0.2%. And taking a look at Singapore and Malaysia, those are also in the red. So not necessarily a clear picture here. After the US stage that rally, of course, there's a lot of things going on during the holiday break. You've actually got on the coronavirus front, US has been seeing a rollout of vaccine, which is picking up speed after it had quite a slow start. And Anthony Fauci, of course, the nation's top infectious disease expert, said that could be fully on track now within 1 week. But you've also got New York, their cases slowing a day after the state had 1 million total infections, so just 1 million just in New York alone. And then you've got United Kingdom. So apart from the fact that, Brexit is now official, they're now out of the European Union, you've also got tougher lockdown measures over in England, possibly school closures now. And another thing to be watching out for are Chinese stocks. So they're still closed here when it comes to my terminal, but they will be in focus now. You've actually got the US saying last week that the New York Stock Exchange would remove the 3 biggest telecom companies of China in New York Stock Exchange, and the Chinese oil majors might be the next. So something to be watching out for here, Jess. It's not necessarily all roses here. Oh, I did want to mention one last thing, by the way. That is, of course, Bitcoin. So, while everyone else was sleeping, those equity traders, they were cryptocurrency traders gaining quite a lot of money. At least if you had been invested in Bitcoin, it's now trading at 32,862. It's just moving really quickly. There you can see how that has just been a monumental surge, and that's just continuing even up to right now.
Well, it seems a lot of institutional investors, Jan, are really banking on Bitcoin at this stage. Let's try to see how that, of course, will move on as we move along in 2021. But let's zero in on what's happening here on the local bourse here. Our PSC president, Ramon Monson, we did have him on the first day of Jan. He laid out the plans for the local bourse. On the back of these, you also have analysts expecting better market performance this year. What are the upside risks?
Okay, so some exciting news for you, Jess. Unlike the other countries in Asia, our index is opening in the green. So that's together with Australia and a couple of other indices I just reported on earlier on. We are at 7142, so that's a little bit up. That's 0.03% up. So I guess, market's still trying to digest a lot of things. And as you mentioned, yes, we had Ramon Monzon, president of the PSC, on our show on the 1st of January. And recall that he had mentioned that last year, despite the fact that it was a very challenging and volatile market, the bourse was able to raise 104 billion pesos in terms of equity funding, and that's 2.9% higher than what was raised in 2019. And this despite the fact that trading hours were shortened, capital markets were closed for a couple of days here, and also they said that 44.3 billion was from IPOs. You've got 41.2 billion from other follow-on offerings, and also some from stock rights and private placements. Now, what are they targeting now? 3 IPOs this year, hopefully, and 4 REITs or real estate investment trust listings. Recall that the next one that we are looking at is the Double Dragon REIT. That's going to be 14.71 billion, and that will be listing on February 26. Now, as for the levels in 2021, you've got a couple here weighing in. Mike Ricafort of RCBC saying it will be between 7,500 to 8,000, so still some room to run. And you've got Darren Pangan of Timson Securities just looking at the short term for today, saying it might actually be inching up, Jess.
Okay, let's see if that's going to at least come to realization if we're going to have indeed a green day for the first trading day of the year. Unfortunately, Dan, it's not all roses this morning. You've got some disappointing manufacturing figures to break. Share the news.
All right, so this just in, right, as of 8:30 this morning, this is the IHS Market Manufacturing Index for the month of December. That's 49.2. Now, that is versus a 49.9 print in November. Now, recall, Jess, that anything under this red line that you're seeing on my terminal, which is 50, indicates a contraction in terms of manufacturing compared to the month prior. So this is already the third consecutive month of contraction, and also our output has fallen. That's 48.4 versus 50.2 in the month of November. However, the new orders have risen. This is actually the highest reading when it comes to new orders since September 2020. So let's see how markets will be digesting this news throughout the day, the trading day. We've got more on markets later on in the broadcast. We've got First Metro Securities Paul, Michael, Angelo. Meanwhile, we are also looking forward to vaccines, Jess, and you've got more on that vaccine saga. If that gets delayed, especially here in the Philippines, do we have enough funds to cover an extended health crisis?
Well, for one, it's not very unlikely for delays to happen. I mean, you just have to look at what's happening in the US and in the UK, wherein doses were actually falling short by the million even. And so it's not, like what I mentioned, it's not very unlikely for that to happen here in the Philippines. But more to your question, do we have enough in our arsenal to actually respond to the crisis? Should it be extended? Should vaccines actually get delayed? Well, according to the Asian Development Bank, we may not have allotted enough budget for pandemic response. Trying to take a look at the figures here, at least those compiled by the ADB, they did say that the country's pandemic response has so far totaled to $21.65 billion, or that's around 5.9% of GDP. When you try to compare that to the rest of the region here in Southeast Asia, it would seem like the Philippines actually has the sixth largest in amount. But when you try to compare that, when it comes to its total share to economic output, we are actually fourth smallest in terms of share to GDP. Just try to take a look at what Singapore has spent so far for their pandemic response. that has already totaled $89 billion. That amounts to around 25% of their GDP. Malaysia, likewise, has spent $81 billion, or 23% of their GDP. And then Thailand also at $84 billion, 16% of GDP. And when you try to take a look at the situation in these countries, there's really a big disparity to how much we are spending compared to them, considering that these countries have so far managed to contain or keep their cases low. Singapore, we're talking about, if I'm not mistaken, 50,000 cases. Malaysia, a little over 100. And then Thailand, if I'm not mistaken, has not even reached 8,000 cases as we speak.
Wow.
And so, considering that they've managed to contain everything, they actually have a huge budget for their pandemic response. Whereas for the Philippines, it's only at $21.6 billion, or 5.9% of GDP. But according to the ADB, total amount really is not a good indicator to say that the pandemic response is enough. If you try to take a look at the figures of the DBM as of December, the government has already spent 500 billion pesos for COVID response, and they have earmarked so far 73 billion pesos for vaccines. The target of which is, of course, to somehow inoculate 25 million of the population, and they're going through that, of course, by borrowing from multilateral lenders. With ADB, we have already loaned $325 million for the World Bank. We have earmarked $300 million. Now, according to Jesus Felipe, he is an advisor over at the Asian Development Bank. Should shots be delayed, the government actually needs to shell out more. According to him, the economy will not move out of this phase and fully recover if the government is not going to widen its fiscal response. Now, Sid Terosa, an economist from the UANP, did say, a bigger stimulus package would have accelerated the country's pace of economic recovery. Authorities, according to him, had to make tough fiscal choices that had equal negative trade-offs. But the thing is, the government should continue to roll out stimulus measures within the available fiscal space. But it's not just that concerns a lot of experts here. You have Dean Dumanito of Stratbase saying that transparency is also key. The government should show how funds are actually being utilized. According to him, so far there has been a lack of accountability, and he fears that funds may actually be used for private gain, especially with the 2022 elections already nearing.
All right, Jess, so same narrative pa rin, no? One of the least in terms of fiscal stimulus compared to the rest of ASEAN. And if you take a look at our cases, however, maybe one bright spot is the fact that we're still below 1,000 new cases. But of course, they have also mentioned caveat here that's because of also lower amount of testing during the holiday season. That's vis-a-vis 500,000 new cases worldwide, Jess. Okay, guys, we'll have more stories when Business World Live returns. Stay with us.
you're still watching Business World Live, I'm Jess De Los Santos. The government is hiking its excise tax collection target on sin products this year to offset the slump in sales volume amid the pandemic. The Finance Department said it's targeting 298 billion pesos in collections for 2021. This is nearly 30% bigger than the downgraded 230 billion peso goal in 2020 and the total excise tax collections in 2019. However, this is still 10% lower compared to pre-pandemic projections by economic managers. Tax collection agencies expect to collect the bulk of excise taxes from tobacco products, followed by alcoholic drinks. Excise tax rates on sin products have again been increased this year in compliance with sin tax laws. This increases tax imposed on cigarettes to 50 pesos per pack this year from 45 pesos last year. Now, the Anti-Red Tape Authority is urging all LGUs to fully implement the Business One-Stop Shop or BOSS for business registration and license renewal. ARTA reminds LGUs that failure to establish and operate BOSS will place them at risk of a formal investigation for non-compliance. With business one-stop shops, business registrations can be completed in less than a day and in just one stop. ARTA will conduct surprise inspections starting this week to check if LGUs comply with certain requirements such as a single window for submission of all requirements and a unified application form, among others. Yesterday, the Pasig City government already launched their Business One-Stop Shop at the Ayala Mall's 30th along Meralco Avenue.
And television is still regarded as the most effective tool of mass media, at least for Filipinos. Citing results from the 2019 Function Literacy Education and Mass Media Survey, the PSA says Filipinos aged 10 to 64 are almost always exposed to television. Broadcast media dominated the survey, with TV gaining a 96% exposure rate, while radio followed with over 75%. Social media exposure is up next with almost 74%. On the other hand, newspaper use declined to about 63%. However, Asian Institute of Journalism and Communications' Ramon Tuazon expects television's exposure to fall. That's due to technology convergence. Tuazon adds that Filipinos will be more exposed to the internet in the next 2 years or so. That's as distance learning continues to gain popularity due to the pandemic. The last-minute global rally of 2020 is expected to continue through to the new trading year, but will our own local equities be up for that challenge? Here to share with us his year-opening views on the market, we have with us First Metro Securities as Paul Michael Angelo. Good morning, Paul. Happy New Year.
Yes, good morning. Happy New Year also.
Well, let's take a quick peek at the specific stocks that are moving in the markets this morning. You can see here on my terminal, finally inching our way up by 0.4%, 7161.92. Any surprises here when you just take a look at this list? Are they, the same stocks that we've been seeing from last year, or are they related to how the outlook is going to be for 2021?
For me, I can see PLDT and Globe beginning to rally. That's quite a surprise, but not really because we're expecting the internet play to be back on track again, especially now that there's a third contender and eventually a fourth. And hopefully, these two firms should shape up, improve their services, and by doing so, they could once again gain market share and then improve margins, which will also reflect in their earnings.
And can you say the same for URC? So this is a specific stock that's very much linked to consumption. Any idea why these types of stocks would actually be the ones worst performing at the open?
It's not really about consumer stocks being at the worst open. It's just that during 2020, because of the pandemic, most of the consumer stocks has already rallied. As a matter of fact, it was our top picks last year, and it really
Okay.
materialized as we have expected. It's just normal, I guess, that once you begin, once a rally has occurred in the past period, it would make some consolidations with a downward bias, at least on the trading standpoint.
Okay, so still a lot to be, a lot of moving parts, nevertheless, especially for the rest of the trading day. But let's talk about this market open. Is this something you had expected? The last trading day of the year proved to be in positive territory, even as year to date we were still down by more than 8%. To what extent is there optimism in the markets as we reopen, given the fact that, even if there's, stimulus and vaccines over in the United States, here we're still having quite a number of difficulties when it comes to laying out our plans for that vaccine procurement.
As to the movement of the market, the main factor that we're currently looking into is the number of new cases. That is truly reflective of how the government is acting their part. Mostly, if the what you call this, if the new cases are going up, that's worrisome. Not only because the economy will be, you know, will be affected, but also health, because the workforce is one of the most important factors in a growing economy like the Philippines.
Can we talk about those new cases? A lot of analysts had expected a major surge during the Christmas break period, and that this might actually lead to severe lockdowns. Now, the government has declared that there will still be the least amount, let's say GCQ here in Metro Manila for at least another month. Was the number of cases this actually encouraging in terms of it's still below 1,000? Or is it still worrying in terms of there might be a risk of spikes, especially as we continue to reopen the economy?
During the Christmas break, during the Christmas breaks, it was actually quite a relief that at a certain point in time we reached a count below 1,000, and I think the latest count is only around just above 1,000, and that's on our part that is quite satisfying. But again, we really have to look forward, to look more into the counts. If we really have to see the progressions, and that would probably normalize because most testing centers are going to really, are going to begin releasing the reports, and most patients, if ever, would begin to go to these testing centers.
Okay, so actually still waiting on that data. Let's take a step back, Paul, and talk about the things that are going on offshore. You've got this second variant or strain, whatever they call it, over in the UK that's now in several countries. I think there are now 21 countries that are banned from entry until January 15 here in the Philippines. To what extent has the markets already digested this new strain and priced it in the equity markets, and to what extent are we pricing in the new stimulus that has been coming over in the US, and whether that will have a direct effect on our own equities?
Well, all of these efforts are considered as a positive on the Philippine setting. No, the fact that we were able to release travel bans as early as we were able to have knowledge of the new strain shows good signs that we're currently making our efforts. As to the other news out abroad, it's normal considering that if there is a positive news, especially in the US, it will usually trickle down into the local equity markets because US is the largest, it's one of the largest economies, and we some institutional funds are just replicating or what you call it, using the United States markets as a benchmark on how they would move into the emerging markets.
That's actually a very good point to make here. To what extent are we, correlated with how the US will has performed or will be performing? Is it going to be mutually exclusive this year in that there's going to be, a rally towards developed markets, still safe havens, and emerging markets will be falling behind? And to what extent does that global rally actually bode positively for us in terms of risk appetite?
Historically speaking, and this is before, when there is positive news in the U.S., it naturally reflects on us. If there is
Mhm.
negative news in the U.S., definitely it reflects harder on us, because again, as I've said, U.S. is one of the largest economies, and we really replicate the movements of the U.S. Mostly also because some institutional investors are foreign. So they really need to balance out their funds because, like for example, the Philippines only represents a small portion of
Mhm.
their total portfolio basket. So again, they really have to focus first on the or on US because most of their funds are out offshore.
Are you seeing a rotation from the safe haven assets, like bonds, for example, and some safe haven currencies, over into our own equities or emerging market equities in general? And or to what extent are you seeing? I just reported that crazy rally for Bitcoin over the period. What does that signal in terms of equities and how investors are now positioning in different kinds of assets?
Again, that would just reflect on how certain institutions are making their trades. No, if a particular fund is aggressive in nature, naturally he would move into equities or some of them Bitcoin. But I highly doubt that. As to the Philippine setting, I'm not sure whether there are institutions playing with Bitcoin. But as to the more aggressive stance, it's definitely equities. But if, for example, your portfolio manager is more conservative in nature, they would definitely go to bonds because even though
Mm.
it has lower rates right now, because we're currently operating in in a currently low interest rate environment, at least you are secured. It all depends on how these institutions think. Like for example, if the fund manager has an is an insurance company in nature, naturally they would look long term. That's why
Mhm.
they would invest more conservatively. But if you're a hedge fund, these are aggressive in nature. That's why they would look for any possible opportunity to any investment assets. And one of the most aggressive assets in the Philippines right now is equities.
Well, can you explain this net foreign buying the last trading day of the year after day weeks, or let's say, of a market exodus, and to what extent is this a strong sign that we might actually be seeing the foreign investors come trickling back in?
Naturally, throughout 2020, there was naturally net foreign selling because there is risk of sentiment as of the moment because of the uncertainties relating to the pandemic. But right now, I guess they're already preparing for next year. Most analysts and economists are banking on a recovery year, and I think I also agree on that because naturally 2020 is a low base, so whatever results you have for 2021 will definitely reflect on the earnings performance of the companies. If you're going to look into the performance of the companies, we could see signs as
Mhm.
early as second quarter earnings because first quarter earnings still doesn't take into account the COVID pandemic. Really, it will depend on second quarter earnings, 2020. So that's around August.
Okay, so we
You could
still have
consider.
some way to go until the foreigners start coming back in on the back of some confidence there. And finally, just one question, Paul, on which are your biggest bets, so to speak, this year? Which sectors are you most excited about? Are you going to be investing in the cyclical stocks that were battered last year, or are you continuing to bet on the ones that had performed well?
Definitely those that we have said that already performed well. For example, consumer is now we're now taking more of a neutral stance because
Okay.
we our clients have already taken profit of it on that. As to what our picks would be on 2021, we're still calibrating. We already pretty much have an idea on what we're going to pick, but let's see. We will wait.
Okay, so it's still wait and see mode here. You can see on my terminal here, mainly in the green, at least for the first 30 minutes of trade. You've got services leading 1 3/10% up, and financials as well. But industrials, nevertheless, still sitting out and still stuck, let's say, in 2020. Thank you so much for those insights. That was Paul Michael Angelo of First Metro Securities.
Yes, thank you.
And that's the first look into the business day. Today is Monday, January 4, 2021. I'm Danie, Laurel.
Catch us again tomorrow at 9:30 a.m. I'm Delos Santos. We are One News.